Welcome to our monthly market commentary extra. Justin White alongside Andrew Lockman, our AVP of Trading and Pricing, as we break down yesterday's Fed decision. Andrew, the last time we saw the Fed cut rates, we saw mortgage rates go up. This time around, it was the opposite. Mortgage rates went down a little bit. Why was that the case?
Yeah, we've seen that happen pretty consistently, where Powell's press conference tends to move mortgage rates, interest rates higher in general. So it was kind of a nice surprise to see that yesterday rates kind of stayed where they were and actually improved a little bit. And I think that a lot of that has to do with just his commentary on the progress of what we've seen so far, and that the economy still seems to be in a relatively good place, but they're still keeping a close eye on inflation in general.
Andrew, speaking of Jerome Powell, yesterday he said that we're well positioned to wait and see how the economy evolves from here. What do you make of that as far as it relates to future rate cuts?
Yeah, so I think when they say wait and see, they really want to get more information on a lot of the economic data that we're still catching up on after the government shutdown delayed a lot of important releases around jobless claims or payrolls, and really the health of the economy in general. And right now, next year, the Fed's expecting just one rate cut. But even with yesterday's decision, you could see that there's still a lot of disagreement and difference of opinions of what direction rates are going to go going forward. So there's still kind of a lot to be learned from the data that comes out over the next few months.
Yeah, and of course, Andrew, one of the big things that people are talking about with the Fed is that we're going to get a new chair, and that is coming sooner than later. What do you think will happen with mortgage rates once we do have a new chairman of the Fed?
Yeah, so I think we could find out more around who the replacement's going to be over the next few weeks to a month or so. And it's been pretty well documented that President Trump's been fairly critical of Jerome Powell and the Fed in general, and thinks that their benchmark rate should be significantly lower than where it is now. So I would expect that anyone that he nominates is going to feel somewhat similarly that they want rates to be lower. So I would think that the expectation of more rate cuts could go up, or we could see the market expect more rate cuts next year than what people are thinking right now. But a lot still up in the air with what we see from that economic data, like I touched on earlier.
So since this was the final Fed meeting of the year, I want to ask you, big picture, how will you look back at the 2025 mortgage market?
Yeah, I think where we are right now, we're close to the low 30-year mortgage rate that we've seen so far this year. We kind of touched the lowest levels in late October, but we're not far away from that right now. And at the very beginning of the year, the average mortgage rate was just over 7% on 30-year. And, there was a lot of volatility early in the year when tariffs were announced. People weren't really sure what the impact was going to be. But I think we've steadily seen progress in the second half of the year. And the average mortgage rate now is closer to 6.25%, or even a touch lower than that. And I think looking back, we still want to see rates continue to move lower from where they are right now. But taking a step back, we're in a much better place than we were just 12 months ago, I would say.
Yeah, it's great perspective. Andrew, we appreciate your insights, and we will see you again in 2026.
Thank you. Yeah.
And thanks for watching. Yeah, this was your monthly market commentary. We'll see you again early next year.